Thank you everyone for joining. Good afternoon again to all of you who have just joined. So this is our Space to Grow session, all around getting investment ready. So Space to Grow, for those of you who don't know, is our series of webinars that are all focused around investment readiness. We cover different topics on a weekly basis, all from the pitch deck, which we'll be looking at today, through to things like tax and financial aspects of getting investment ready, suitable for everyone, whether you're an entrepreneur, new to starting up your business, more experienced entrepreneur, an investor, or a business professional. So you're in the right place. So if you haven't been to one of our sessions before, make sure to check out our website to see all of the upcoming sessions as well. We also run the Angels of Essex Equity Investment Platform, which is all about helping showcase innovative entrepreneurs to investors looking to invest in them. So if you're interested in finding out more about Angels of Essex, please do let us know as well at uez@essex.ac.uk. As I said, today it's all about investment readiness, focusing on the pitch deck with William Millar and Nitin Patel. So these guys are our entrepreneurs in residence at the university. Do a really great job in helping actually support the businesses who move on to the Angels of Essex platform. So some of you may have come across them before.
Thank you, everybody. Good afternoon. Thank you for joining this webinar. And then, as Josh said, Nitin and I are going to look at the contents and the structure of a pitch deck that you would present to an investor if you were seeking equity investment. So moving on to our agenda.
So just having a look at the poll, there's a vast number of people who've already done some of this and people who sort of looking to start. So hopefully we've got enough content to have both, particularly for people who've already got down the process of creating a deck, because one of the interesting things that myself and Bill have sort of focused on, particularly for the Angels of Essex platform, is how investable you are. And that, to an extent, is sort of the last 3/4 of your deck, because we really want the story to be enticing an investor to want to invest in you. So just going through the agenda quickly, it's an equity investment right for you, because part of the question you have to ask when you're deciding that you're going to sell some of your business, and people who come on may have a view of what they want to see in the business and how they want to see it and the progress. So there's always a challenge to make sure that the right type of people come along with the investment. We will go through in some detail the contents of the pitch deck, and then we'll just summarize at the end, and there'll be some answers and questions and answers. Is equity investment right for you? As you can see, there is lots of potential for people to get investment in apart from equity, but equity is a special means. And one of the keys you've got to remember is you're selling part of your company in the form of shares. And that, as I said previously, could result in the dynamics of how you want to operate the business, how you want to run it, could change depending on how much influence and how much ownership the equity brings to the new guys on board. There's other forms of things that happen as a result of people investing. There's almost a speed. Typically, people are looking who invest, who are not the founders, for a return. So they have a time and a set of numbers in their mind. So again, they would have hopefully done some work, talk to you quite intimately about what they see as what they want out of the business and the time phases. And it's no real shock as you progress, but it's almost good to have a good relationship with all the investors. Bill, do you want to pick some of the key aspects?
Yeah. Another thing to be aware of is that equity investment is not the only form of investment that you can get in the business. So it's possible to get the hold of some money through debt, or it may be possible to get a grant. Now, for startup businesses, it's usually difficult to get a grant, although some grants are available in certain areas. So it's worth looking out for those as well. Quite often we see businesses who are looking for equity investment, but they could get debt, and it's something they haven't really considered. So that's something that we talk to them about. And the other thing to say that once you start out on this fundraising journey, it is a journey, and there will be high points and low points along the way. So be prepared for all of those as you go along. It's not just a simple, if you build it, they will come type effort. You've got to work on the campaign to raise that funding and speak to a lot of people, be they investors or be they banks that were offering you debt, finance, or even to get access to grants. Okay, so for those people, thanks Joyce, for those people who haven't investigated other forms of funding, a useful resource is the British Business Bank's Finance Hub. So if you Google for that, British Business Bank Finance Hub, there are lots of questions there that the Finance Hub asks on the screen, and depending on your answers, it will guide you through to find a different type of funding, or all the types of funding that will be available to you. So it might be worth looking at that. British Business Bank Finance Hub.
Okay, so we'll start through the contents of the deck. And as you say, it is a sales pitch. The investment deck is really about you selling part of your business. So it's very important that you get the messages you want across to the investor. And that's got to be done through a precise set of slides, which is a normal way of achieving this. There's also lots of different ways in terms of communicating now that are available, but they all have a similar requirements of the content. So the sort of content of what we're talking about is easily transferable to other media, but the actual stuff that you put into each of these slides is very important to get that message across. And as you can see, there's a number of key elements that should be put into a deck. And some of the key ones we'll just quickly go through. But number one is obviously the problem statement. And you really have to make the investor understand the problem you're looking to solve. And for me, the other one as well, apart from the solution, is the business model. Because when you're looking for investment, you're also looking to show someone how you're going to create value for their investment. So there are two I picked out. Bill, do you want to pick a couple more, and then we can go into detail?
Yeah, so overall, you're telling a story about your business and you yourself, and what it's going to do and how you're going to do it. So as well as the content that we're bringing out here individually, you want to make sure that that story is told from start to finish. And remember too that you're selling part of the company. So as Nitin has said, that's bringing other people in, and that creates a different dynamic. But it's important that the people who are already in the business and who own shares in the company are also in agreement that you're going to seek equity investment. And make sure that you realize your responsibilities, because you've now got a responsibility of bringing that money into the company from the investor. You've now got a responsibility to the investor to return that money to them. So one of the things that we find in the decks that we look at is quite often people have done a lot of work, but they don't record that in this deck itself. So the current status of the business itself is an important one to bring out, because that validates some of the things that you're saying. And also the team as well, something that doesn't get a lot of focus. They tend to, well, we know everybody that's in the team, but the investor doesn't know them. So it's important to bring that out as well, because the team are ultimately the people who are going to live and breathe the business and deliver on the promises that they're making. We also advise as well that make sure there's no technical jargon or acronyms in the deck itself. All too often people know the industry that they're working in, and they assume that everybody else reading the deck will know the acronyms and the technical jargon and what it means. But quite often the investor won't know that. They're looking for a business to invest in. So make sure that it's easy to read and easy to understand. And we also say put one idea on each slide. You know, if you're talking about the current status, well then stick to the current status. Don't bring in things about the market opportunity and the business model, because that confuses the investor. You want them to be able to read this, pick up the story, understand what you're talking about, and get through it from start to finish. And then you want them to speak to you.
Okay, right, we'll go through all the points in detail and describe what we think are the key elements in that slide. And so if we start off with the problem statement, as we said, it's very important that the problem's real. You describe it in a language that is easily understood by people who are not necessarily knowledgeable as much as you are, or even involved in depth in experiencing that problem, because you've seen the problem through work or something that you face on a daily basis. So it's clearly a question of getting that message across. So when you start talking about the solutions and why this is a business, it's all set around the problem you're solving. Bill?
Yeah, for me, the problem really is the key thing that sets out where everything else follows. So the problem clearly defined and understood by the investor then leads on to the solution itself. And the solution is the thing that you're going to provide within your business. So problem leads to solution, but the people who have the problem are they form the market. So that generates your market sizing and all the information that goes around into creating a marketing campaign. So get the problem right, get it simply stated, understand who has it, and then everything else follows from that. Now we talk about the problem, but that it can also be represented as an opportunity. There may be a change in legislation coming along, which is going to create an opportunity in some industry sector. So you're really talking about an opportunity to create a business, but effectively solving the problem is the thing that creates the business itself.
Okay, and so as we've already alluded, that there also needs to be a solution within the deck, and sometimes this is where we have to work hard with some people to get them to actually review and reveal what the solution is. It's not really acceptable to sort of hide a lot of it. Maybe, you know, there's some elements that you don't want people to know, and then that's a different way of communicating through an NDA, but it's not acceptable, I think, to say, you know, it's a secret. Sometimes we do get that, not that comment, but that sort of perception in the discussions we have. So make sure that, you know, you can sort of get the solution statement, one, in its fullest sense, that it can go across to anyone who wants to sort of understand it and review it, or two, if there's elements of it that you give enough to make sure that they understand that you have got something that they need to talk about, and then you can ask them to sign an NDA to get more information. But it is vitally important that you do make a good attempt of what you can tell them in terms of the solution, because most people will look at the first 3 or 4 pages and decide whether they want to carry on or not. And one of the key to any deck is the sort of solution and how they are going about solving the problem they've identified. Bill?
Yeah, for me, the solution statement should relate back to the problem. So if you've stated your problem and maybe you've broken it down into 3 or 4 different areas and you put those under 3 different headings or bullet points, then your solution statement should relate back to those. So if you've got 3 different areas in the problem statement, then I would expect to see 3 different areas in the solution statement so that you can match them one for one. And once you've started then developing the solution statement itself, you're starting to open up then to the questions, you know, who's going to use this solution? How often are they going to use it? How much will they pay for it? Why is this solution better than others? And so all of those questions will be dealt with later in the deck. But you want to get, this is your opportunity to state the problem and state the solution. And from that, then the investor knows what you're going to do in the business.
So once you've got a problem and you've got a solution, the next thing we want to know is whether there is a real market and whether you have the sort of knowledge or find enough about understanding what the market is that your solution will find someone who will value it. And that value is really important, because that's when you will see whether your idea of a problem and the solution is worth something to someone else. And this is an area is quite important at the same time as the other things we've talked about, to understand the market, the target, and what part of the market your opportunity will allow you to get a serious benefit from. So there's a standard model, which Bill will talk a little bit more in depth, but the key thing here is to make sure that big market sizes don't just lead to big market shares for businesses starting up. They have to show how they're going to go about achieving those numbers in terms of revenues and customer acquisition. Bill?
Yeah, so the standard way of talking about this is in terms of the TAM and the SAM and the SOM, the total addressable market, the serviceable addressable market, and the serviceable obtainable market. And you can see in the picture that the serviceable obtainable market is really how much of that market are you going to be able to access and capture. And that then is some fraction or percentage of the serviceable addressable market, which is the one that you could possibly geographically reach. And that in itself then is a percentage of the total market. Now, those can quite often be expressed in terms of, you know, hundreds of millions of pounds or hundreds of thousands of customers. But because I come from an engineering background, that doesn't really make a lot of sense to me. I'd rather see it from the other way, from a bottom-up build, in which case you would want to identify who your ideal customer is, and then from that figure out how many of those ideal customers can you identify, and then how many other ones are similar to those ones that you may not know about but that could possibly exist. And once you've got that kind of number of customers that you can access and how much they are going to spend on your product, that those two numbers multiplied together give you an idea of the market size that's available to you. And that in turn then gives you some kind of model of the market itself, so that you will know then how much effort you're going to have to put in to sell to them, which in turn then gives you a view of your marketing campaign and the sales resources that you're going to have in order to make those sales. So from my perspective, do a top-down build, yes, through TAM, SAM, and SOM, but also do bottom-up build so that you know how many people you're likely to be able to sell to in the first year, the second year, and the third year, and what that's going to mean in terms of the resources that you need within the business. And then you've got a question about the market itself, because nothing is static. Once you enter the market, then other things, you're going to change that, and other things will happen. So some people may decide to follow you, change what they're doing, and they will come along and take part of that market for themselves. So you need to think, how long is this market going to last? And there may be some other changes coming along, technological changes or legislative changes or whatever, which will disrupt it and take it away overnight. So you need to think about things like that as well.
So now sort of we've got the business to a level where we know there's a market for it. We know that we've got a solution and we've identified a program. So this business model is about how you're going to get money for that idea from the market. And one of the key areas during the business model analysis is to understand the costs and how you incur costs, and how costs are made up can vary depending on the business and the model the business is trying to sort of get itself to the market. Over the years, there's been lots of different ways of cost plus, or having a set target to set the product within a band of an existing range of products, and then working backwards to say this is what the product costs need to be. But whatever technology and techniques you use, it's important that once you've decided that it comes across well to an investor, because most investors will have a view on how much money they think they want to get a return on, and how you tell them about building the business, the sort of revenues they can incur, and how those revenues are going to be made up of, is very key to the credibility of your business acumen for these investors to consider in their sort of analysis of whether they invest or not. So there's some key elements to look at. We won't go through all of them. Bill will pick a couple of them out, but it's important that you make it understandable to the investor on how you are going to go about collecting money for your business and the cost elements of it.
Yeah, I think in some industries there are sort of standard business models within those industries themselves, and so you've got to use them. One of them being like software as a service, the SaaS model, where you may have what they call a freemium version. So you get a restricted set of functionality which is free to use, and then as you add more features, you will have then a different pricing model. So it's so much per user per month, depending on the feature set that they've got. But there may be a free service to start off with to get you hooked into it. So there could be a standard model that's used. One thing that's important to realize that it's generally much more difficult to start with low pricing and increase it than it is to start with a high pricing model and reduce it. You know, if you're not sure what the pricing model itself is going to be, start high and reduce it. And while it may be obvious, it's important to realize that whatever you're charging, that's got to cover your costs and provide you with the profit that you need to reinvest into the business. So that does mean that you've got to understand, your cost base and how that impacts the business.
So sales and marketing, these are two elements of a business that need to be considered, in my opinion, fairly separately. But in a lot of early stage businesses, they're combined because there's not the affordability of having either separate people or certainly functions that would require additional resources to man the two sections. But marketing is a cost and sales is about getting revenue. And marketing is important for early stage startups, depending on the market they're aiming for, how big the market is, how sort of innovative their problem solution is. And there is a number of ways today that are a lot more cost efficient than in the past of marketing yourself, particularly through social media. And there's ways of understanding and learning about that through lots of different opportunities. And one of the key things is to understand that what you tell people has got to be real and true, because it's only one or two people who find that what you're marketing doesn't fit what you're actually producing, and it could turn backwards for you. And on the sales side, it's more about driving the numbers up. And this is really about having an engagement with your customer, understanding what will make him buy the product. The hardest thing in a business is for you to get someone to give you some money for what you're going to give them, be it on a consultancy or knowledge, or on a product basis, a product that you've manufactured or assembled together.
For me, one of the things that's helpful whenever you're doing marketing, especially as a startup business, because remember, as a startup business, marketing is always going to be a cost to you, and you may not know at the outset how well your market is going to do. But one of the things that is helpful is if you have that view of who your ideal customer is. So generally what's called a customer persona. And from that, then you can get an understanding of where that person is going to get their information about new products and new services. And that would help you target your marketing. So for example, if you're doing something in specialized insurance, then the brokers will be members of trade associations. So you'll want to go to those trade exhibitions that they would have. If you're doing something which is much more localized and towards, say, the retail side of the market, then that could be direct through digital marketing, or it could even be through the local press. So understanding who it is that you're targeting and where they're going to get their information guides your marketing campaign and helps you reduce your wasted costs that you're going to have in marketing. You should always, when you create a marketing plan and a marketing budget, you should then monitor that and see, you know, which channels that you're marketing through are generating the most return to you, so that you can then focus again and refocus your effort. And the other thing to be aware, whenever you're selling, you know, if you're selling a B2B service, that will tend to go probably to an enterprise customer. Some of those take a long while to sell, so your revenue can take a while to come in. So be prepared to have that lag in the money coming in from the enterprise, as it takes a long while to generate it. But if you're selling to smaller companies, then it's more likely that that will come in quicker. But you may need lots of small sales in order to generate the revenue. So again, think about marketing where it's focused on, think about selling and the resources that you're going to need in order to make the sales, and time lags and cash coming in.
Revenue projections. These are very important. They need to be realistic and they need to be achievable within the timescales that you're generally predicting that they will. It is a hard part of trying to put a deck together. Sometimes it's very hard if you're doing something very new, and other times it's sort of making sure you're in a bandwidth that is acceptable, particularly if it's an existing market and you're trying to get the market through improved efficiencies or cost reductions, that you have a good understanding of why people would migrate to your product, and not just say, because it's cheap, people are going to buy it, and I'm going to take the sort of shares of people who already exist in the market, because they will fight back. You know, if there's an existing business, then they already have an opportunity to actually come along. So you have to factor some of those elements in when you are reviewing the sort of projections that you want to put in front of investors. You may want to not put in depth, but certainly understand the sort of assumptions that you're making, and be wary about having lots of millions in the short term, because even if you could achieve that, can you actually achieve the growth within your team to accommodate the resources that you would need to have that?
I think key thing is that the investor will want to see a realistic view of what you can do as a business. So they'll be looking at, you know, the sales activity that's going in there, how many customers you can capture, how long it's going to take you to do that. And so having a good model in behind your revenue projections is a key thing, so that you, and it should be parameterized so that you can ask the what if scenarios. What if we change this number here? What impact is that going to have on our revenue projections? What if we bring in more salespeople, and so on? So that's one thing you need. And you know, as Nitin says, if you have the opportunity to grow, then make sure that you can, the business itself can scale to meet all of those projections in the model itself, because you may run out of people, or you may run out of cash while you're waiting to get your money back in through the sales activity. So it's got to be realistic. It's got to be modeled well, so that the investor and you can have that discussion and have it in a meaningful way.
One of the areas when we sort of look at decks that we find quite interesting, depending on how much time people have spent in sort of understanding the market that they're going to compete in, will come across. And generally a good deck will have a good understanding of their competition, so the investor can clearly understand the strengths of what you're providing against the market, and also the sort of benefit of why someone would buy your product against someone else's. Because sometimes in an existing business, it's not always about something that's marginally different, because they may already have a long-term relationship, they know these guys, and they have some good agreements in place that allows them to actually overcome some of the efficiency that they may gain from buying your product. So it is very important that you certainly understand what the strengths and weaknesses are of your competitors in a market when you go and provide something new. And that's a challenge that you have to take on early. So apart from dealing with, introducing your product, doing the work to make sure that functions, you've also got to start looking at the dynamics of the market you're going to enter, look at the competition, try and weigh up the product offering and how that's different, or whether there's possibilities that they can very quickly migrate to something you are doing. The other key area, obviously, that protects you against competition is if you have some IP. So make sure that if you do, then you've done the work to understand that this is something that will protect you, but you have to be ready to protect yourself if someone breaks it. So there's always a challenge, but it's also good to know where the challenges are likely to come from.
One of the things that will turn an investor off very quickly is if you say that our product is so unique that there is no competition for it in the marketplace, because there's always competition in some form or other. Now, what you may mean is there's no direct competition for it, but there could be indirect competition. So when Henry Ford started making Model T Fords back in the day, there was no mass-produced car to compete with the Model T. However, there was indirect competition, and that was in the form of horses and buggies, or trains, or even people on bikes. So remember that statement, there is no competition, will attract the attention of the investor very quickly. So you've got to work through it. And understand what you really mean by it. And if you find that there isn't any direct competition, then there are two questions you could ask there. Well, why is there no direct competition? Maybe there is no market for cod liver oil flavored popcorn or something like that. But ask the question, why is there no competition? And if you find that you're in a place where there is a market need and the market demand for it, there is no direct competition, then you've got to ask yourself, how can I keep ahead in this marketplace? Other people are going to follow me in, so what have I got that will keep me ahead? And that's a question that only you can answer, but it could be your IP, it could be the team that you've got around you, it could be the lead time that you've got in terms of getting into the marketplace before anybody else can get in there. And remember that IP covers a lot of things. It covers patents and trademarks and copyright and design rights and those kinds of things. So make sure you look at all of those. And you may say that I'm a very small company, none of it's going to affect me, but believe us, it can affect you and affect you when you're least expecting it.
As we said earlier on, one of the key things we find lacking in certainly the format we like is the current status of a business. And people sort of forget that they've done a lot of work to get to the stage where they've got themselves in a position to put a deck together with all the content that we're asking that should be in. And as a result, they forget that to get to that state, they've either put their own effort, their own money, they've got friends and done other things. So one of the key powers of someone who's already been running a business and then going to an investor to come along is to show them as to the current status, because that's part of what they're buying into as well. So if you've been going for a couple of years and you managed that yourself, or you've even got small revenues that has enable you to keep it going, that's a very positive situation, even though you need the money to move to the next stage. So as part of this deck, we sort of emphasize to people that they should have something that tells us where they are, how much they've achieved, and then what they're going to do from there in terms of the investment they're looking for. So some of the key areas to consider are the sort of grants or awards that you've won, not awards that are just badges and put them all over, because that can be an opposite as well. But it's a mix between showing progress that you've made and recognition that you've got because there's something unique and special about what you're doing.
Yeah, it's going back to what we were talking about right at the very start. This is a story that you're telling the investor, and the current status is the opportunity to tell a bit more about the story in detail, so where we started from, what we have done to date, And that can be, trials, it can be grants that we've won, it can be the investment that we've put into it. So all of that contributes to telling an overall positive story to the investor. So it's good to get that all into the one place and be able to present it. And make it be meaningful to the investor, because it's validating what you've already been talking about. It's saying that, yes, we have come up with this idea, we've created a solution, we've put it into the marketplace, we've tried it out, or whatever it is that you have done. That creates a good positive story for the investor. And it also helps show them where the risk is moving forward, because if you've already developed an MVP and you've already invested in that, you've already got a development team, then you've reduced the risk in that area of the business. You may not have reduced the risk in all the areas of the business, but telling the current status will show what has been created to date, and then they can make a better judgment of moving forward where the risks are in the business.
As we said earlier, again, the team is an important part. The thing I'd like to pick out here is to make sure that at least there's more than one in part of the team, or you have access to people who can support you. One of the things in some work I do at the Judge is that two founders are always more successful than one. And part of the program there, actually, if you come with just one founder, they insist that you find another one pretty quickly to carry on. So it is important that, yes, there always is one guy who comes with the idea, but it's also vital to make this thing work to the levels that it will be a meaningful growing business, that you either find another partner with a set of skills that are opposite to yours, or people who are readily accessible, that you can work on a regular, frequent basis, rather than advisors who you don't really meet all the time. There's almost an exception, I suppose, that one founder can make everything work, but generally two is better than one.
Quite often we see decks with a couple of the founders on it, or two or three people in the team, and then there's a whole list of 10 or a dozen different advisors that are present on the slide deck as well. And that's kind of hard to believe, because they're not necessarily all going to be participating to equal amounts in the business. So you want to think of who are the key people and who are the key advisors, the ones that you're speaking to on a day-to-day basis, and who perhaps can fill a gap that you've got in the team today. And that's one of the things that you're going to have to think about as you move forward, is when are you going to employ other people, and what are you going to employ them for? You no doubt will have may have a gap in your current knowledge, and you've recognized that and are filling it with an advisor at the moment, and then you're going to recruit somebody into that role, and you want to bring them in sometime in the future, and that may be what your investment's needed for. So those are things to think about as you're presenting and documenting the team part of the deck itself.
We'll just quickly go through this in the sense that what we like to see when we are seeing the decks is really a clear understanding of what you're going to do with the investment, how much it is. It all adds up to the sort of numbers you're asking for, and the percentage that will be the equity that anyone who invests will get as a result of making that funding to you. And generally, it's all about making sure that you are getting the value of your business at a place where people will engage with you and understand. Valuations are always difficult, and as long as you've got a good view on why you're pitching your value where it is, then that's a discussion to have with the investor.
Think about how many rounds of investment that you're going to need as well to take the business forward. So some businesses may only need one round of investment, and that's good. Other people may need a couple of rounds, but try to limit the number of rounds to give you time to build a company. I think that's the thing that we would say.
Okay, and I think that's part of that investment funding. You're obviously looking to make sure that you tell people what you're going to do with the money, and some of the things that investors find hard to accept are always part of the investment going for big salaries or company cars. I think those early days when people got excited with an investment and said it was a way to get something different have gone. Most of the time, we do find that most of that investment is going to deliver something more beneficial in growing the business. And that's important to clearly identify why and what you're going to use the money for and how it will benefit the business, which should come along in your revenue slides. So, Bill?
Yeah, you want to be able to justify each spend item, and you would justify that by showing how it's going to contribute to growth in the business. So those are the questions that the investor will ask. You know, if we're putting this money in, how is it going to grow the business? How is it going to generate more money for me? How am I going to get my return? And that's the question you need to always be asking yourself as you're looking for the investment sum.
So just as we said, summarizing overall, it's important that your deck is able to tell the story of why you are the person who's going to make this business be valuable, and telling the story through why you saw the problem, the strengths about your background that allows you to ensure that is a real problem, how you've encountered it, and the solution that you are putting in place is all part of the deck's key information to entice an investor to talk to you. Now, the other thing we do have in terms of the process is there's lots of opportunities and lots of different ways that you pitch. One of the ways at the Angels platform is you don't get to speak to the investor. So we spend quite a lot of time with people who come to us to make sure that that deck can stand on its own and tell the story. So we tend to listen to people, and then if there's things missing, get them to add. And that's, we find, quite a good way of ensuring that everything you want to get across is actually there without you being there as well. So always do some testing when you're putting a deck together to say, do I understand this if I wasn't doing it? And that's a good way of sort of getting the message across.
One thing for me is make sure that everything's consistent, because an investor may not know the nuts and bolts of the particular solution that you're working with, but they will understand business and how money flows through the business. So make sure that when you're putting down numbers, that they are consistent completely through the deck. And then also look at the investor. What is the investor interested in? What's the attraction? And you can tailor your pitch deck and tailor your pitch itself towards those investors, and focus in on the things that they're interested in. And the key thing always to remember is you don't have to sell to anyone if you don't want to. If the deal doesn't feel right, the opportunity doesn't feel right, you don't have to make that sale. You don't have to give the equity away.
The first question is about the TAM, SAM, SOM. So this question is from Kevin. So our product is creating a new sector in the overlap of needs between two very large TAMs. So they have figures for the two bordering markets, in which they'll be taking a slice of each. So how can they credibly predict sales for something innovative that disrupts the other two market sectors? So in this case, it's a zero emissions product in a growing sector. So any thoughts on that one?
Well, I think, as we said before, that you have to understand where the product's going to sit. So if they're across two markets and those markets are looking for something that will, with your innovation, serve them, then I think it's a challenge, as you said, to sort of find figures to base your revenues on. But generally, I'm sure you can sort of view the market share of those industries and try and put something together. And in this case, I think it's also important that you sort of underline the assumptions you're making, so any conversation is consistent when you're having that discussion.
Yeah, I mean, this is one of the reasons why I don't like TAM, SAM, and SOM, because you'll get huge numbers from that, but you don't really know what the assumptions are that are made in creating those numbers. And so all of the while, when you're making estimates, you're making estimates based on estimates, and that's why it's difficult. However, in the question you said, how are we going to predict sales? So sales to me is a real thing, because you're selling something to a real customer, and that goes back to who are those customers? Why is it that they're going to buy your product? And understand your customers, identify them, and then from that you can build up then number of customers that I'm going to be able to sell to, the price that I'm going to sell it at. That gives my market size built from the bottom up, and that's a much more meaningful approach to me than trying to estimate parts of a TAM which is built on some other estimation to start off with.
Okay, so this next question is around written business plans. So in the context of innovative, digital tech companies, what are your thoughts on business plans? Do founders need one when they look for investment, or is the slide deck sufficient?
I think this is a very difficult one to sort of say yes or no, because it depends on your audience. So, if you're looking for an Innovate grant as part of something you're doing, then they require an element of a business plan, because they want to know that there is an already significant market that you're aiming for. So generally in our deck presentations, certainly from the platform, we don't say people need a business plan, but we have found people who've pitched in other areas to already have a business plan that they can then point towards. So I'm not sure that answers clearly your question, but I would suggest that you do have a plan, but not necessarily that you pitch with it as part of your deck.
Yeah, I mean, I've got sort of 3 comments on that. So if you look at the headings in our pitch deck, you'll find that those headings will appear in the business plan in one form or other. But the business plan will have it in more detail. So you'll have a more detailed analysis in the business plan. And you may then, if you're going to look for debt funding, banks will look for business plans rather than investment decks. So it'll be the same kind of information, but present it in a different way. And as Nitin says, if you're looking for a grant, you'll need some kind of a business plan to go alongside that. So the business plan will support the deck will support the business plan. The whole process of creating the business plan is a journey in itself. It's finding out all of the information that you need to go into the plan. So by creating the plan, you'll have a much better understanding of your business, the market, the competition, and what have you. And having said all of that, most people who write a business plan will never look at it again after a year or after a couple of years unless they're disciplined. So you've got to put the discipline into reviewing the business plan, looking at, this is what we said we were going to do. Did we do that? Or was there a reason why we didn't do it? What happens if we deviate from it? So those are the things that you would use a business plan for as well.
Okay, thanks, Bob. If I'd also just add on that one, we had a session last week with Innovate UK Edge around the innovation model canvas. So that's also another good tool to use when it comes to the kind of intersection between the pitch deck and a business plan. Okay, so one final question in the Q&A then from Hossan this time. So should you approach an angel investor who's invested in a direct competitor? Isn't that a risk? But at the same time, how do you find people who are interested in investing in your sector without them having invested in a competitor?
Okay, so that's a quite complex question, and I think sometimes it's really about personalities and really understanding each other before you sort of opened up the doors to your technology or your business. In the real world, there's more and more collaboration as you grow the business. So is it a good thing to do it from the start? Is I think what you're asking. Sometimes no, it really depends on your own personality as well, because you're an entrepreneur, and the reason you've come up with something different hopefully is because it's going to be very different and challenge what's out there. So I think in the early stages of this, it's very much about you as a founder and what you really want out of doing this business. Going forward, I think as the investment landscape gets more sophisticated, there is going to be venture capitalists and other investors who would have relating investments. So they will look at opportunity, how they can get better synergies from what they're doing. So I would say it's an open mind, but it's also something for an early stage startup to decide where they want to sit and how long they can sit there as well. Because sometimes, you know, someone offer you some money with some help can be reasonably a good way of starting.
I guess for me, the question behind that is, if you know that you've got a direct competitor, then what is it that's differentiating you from that competitor? And what's your USP, and how different are you from that competitor? So you might want to think about the product or service that you're developing first off, and then from that, you know, work forward into your investor. So if you were sufficiently different from another competitor, then maybe that investor can make something out of it by combining the two. But that's a difficult one to call. Finding investors, it's a matter of doing your research, look at places on LinkedIn. Lots of organizations do exist that help investors. Was it Deck Send, I think, is a place that you can go to that will take your pitch deck and send it out. Come and speak to us as well, and we'll aim to help.
Oh, brilliant. I also say, from our point of view as well, Pitchflix is a company that we've been working with to get your recorded pitches out there to a wider audience as well. And of course, the Angels at Essex platform to get in front of investors. So I'll put the details in the chat there for the Angels at Essex platform. So if you're interested in finding out more, just email us at uez@essex.ac.uk. And the final thing is just to say thank you for coming. Again, we do have webinars pretty much every week, especially for the next month or so. You can find more information in the links I put in the chat. Just Google University of Essex Space to Grow. Thanks again to William and Nitin for a great presentation, and we'll leave it there.